Everyone, Spiero here. You're watching Buy and Hold Fundamentals. We're still looking at Milwaukee. Last 20 properties, for this week. And if you don't usually watch this program, then what I do is I analyze 20 buy and hold real estate properties, single family homes mostly, a day as potential cash flow properties. What I do, and then at the end of the week, I take the best of that crop and try and see what that tells me, as well as looking at the overall data from the market we've been looking at and seeing what kind of conclusions we can draw from that market in helping us to identify what are real deals as opposed to what the average that the market gives and what most people will be looking at. It's what's going to help you to identify what's a real deal in a particular market. I believe that there's no way around just having to go through whatever is in the stock of your target market and getting to know it, which takes some, at least some virtual legwork. But having done that, you'll be in a position, a much better position to understand what's out there and to identify something that's interesting or looks good when it comes around and bites you in the ass. So without further ado, we're going to look at another 20 properties, and as always, we grab some basic data so that we can use that afterwards. The only real reason I grab the addresses is so that I can identify the properties afterwards. So if there's something that comes up that's interesting, I can go back and look at those. I pick up the asking price and then the rent estimate that Zillow comes up with. That gives me a rent ratio, and at least looking at 2288. Looking at Milwaukee, we've seen that for something to start making sense, the rent ratio needs to be somewhere between 1.3 and 1.4. Now I've forgotten the tax rate, 2288. No, the 2288. The other thing that fluctuates a lot is the tax rate. So when we can get it, I pick that up. Let's see. Rent ratio is under 1.3. It's still cash flowing, but only at $25 a month, which is too low for what I'm looking for. And basically, what I'm looking for is at least $100 a month in cash flow, and at least 10% in cash on cash. You're not going to find many of those, but when you do, they make a lot of sense. No. Oh, there we go. Rent ratio, rent 725. Another indicator that sort of the Zillow does, something to make you suspicious rather about these rents, 3929. These rents that Zillow come up with, 3929. Is that on very, very similar properties, they're going to fluctuate wildly. And what do we, they're going to fluctuate, 725. They're going to fluctuate, I'm finally going to get that out of my mouth, right? They're going to fluctuate wildly and until you get an understanding of the market. you don't know which one's right. Is the 725 right? Is the 1100 we saw before right? To be honest, at the moment, I don't know yet. So it could be either. It's part of the due diligence you need to do when you look a little bit deeper. That's 470 and 4%. Minus 470 minus 4%. Okay, let's keep going. Okay, so duplex. Okay, do that. And what else? There we go. 850. And that's for sure that's low because it's a duplex and it's 3033. So I'm gonna call that 1,000, and I'm sure that that's still low. And that ain't going to. It's not gonna cash flow, but 3033. Minus 188 minus 6%. Minus 188 minus 6%. Duplex. Don't reflect that. And duplexes sort of are a different animal. As far as the estimates that get spit out here, I don't think that Zilla has a particularly good algorithm to come up with what they're worth. So another duplex. Yeah, I'm just another. And I'm sure I'm low with the 1,000. 2244. Minus 88 minus 3. Minus 88 minus 03. And I'm going to copy that and stick it in here. Okay. About this one. Another duplex. Another duplex. This one's in trouble. Okay. And they're probably gonna go for as low as 40. Again, calling it 1,000 because it's a duplex, and that's gonna look nicer. 1498. Actually, that's gonna look really nice because taxes 1498 are low. And 164 and 10%. 164, 10%. And that's also a duplex. There we go. Another duplex. Okay. And that sort of gives you an indication of what that other one would have gone through. This seems to be in better shape. I'm calling that 1,000 as well. Let's see if we have taxes. We do 1882. 1882. 176, 13%, 176 and 13, and another duplex. Let's see what else we can get. Another duplex. Okay, that same qualifier, the owner will look at reasonable. All reasonable offers is start with something unreasonable. And that's still not going to fly. I'm going to stick in that fake 1,000. Oops. And looking for taxes, 1908. 1908. $152 and 10%. When they say that they'll look at reasonable offers, it means that they don't feel like being lowballed, but they probably know that they should be. So go for your low end, right? So don't necessarily nope, not specific enough. Go for your low end. That might not be as low as wholesalers are trying to get these places for. So if they're asking for 60, they might be getting offered 25 really regularly and getting tired of that. Okay, it's a single family, so I'll take that. And they're sick and tired of that. But if you go a little bit higher than wholesalers, 1903, then you might have a chance, or at least they'll start talking to you, and your starting point is a lot lower. They're going to have to, if they haven't thrown you out, then they're still talking to you, which means you have a chance of getting a good price. Rent ratio is below %, so that's not going to work out. Not surprised that cash flow is negative, minus 30, minus 1%. Okay. Another duplex. It's overpriced as far as Zillow is concerned, right? They're saying about 20 under. And what's this guy saying? Yo, that's not gonna work, and taxes are missing. So this is even iffier. Let's call that like that. Minus 218, minus 6, minus 218, minus 6, and we're going to say duplex, no rent or taxes. single family, and that's now underpriced as far as Zillow is concerned, which, if it truly is, means they're trying to sell, or they're really trying to sell, or they have a real problem. And that might be a problem with the property, 980, meaning it's got tax liens on it. They just discovered that it's built on an 1605, an old gas station, and got hit up with environmental stuff. What was the 980? Or something of that nature. Or they're in financial trouble and they just need cash. Okay, well, 3% rent ratio, so obviously that's going to work. 247, 25%. 247, 25%. Well, here, you see, this is interesting. So they're trying to sell, they put the price right at the estimate that Zillow's come up with. There's probably some work that the city's requiring them to do, because they're already saying that that you're responsible for that if you buy it, which means that they have shit lined up. And they're telling you that it's not going to work as an FHA loan, which means that if you're trying to buy it at 3.5% down, it's just not going to pass. Meaning either they tried it and it didn't work, or they've had buyers that tried it and it didn't work. Property needs some TLC means that it's run down. Okay. It's not necessarily a bad thing. Gives you room to negotiate. And if you're investing, you're not trying to buy it for 3.5% anyway. Right, okay. And taxes. Holy shit. That's gonna kill anything, right? What in the world happened to them that they're now at 78.38 in taxes? There we go. That's the dirty secret. 78.38. They're in a reasonable position as far as the rent ratio is concerned. Actually, they're in a very good position, but that tax bill is just killing them. So, negative 360. Negative 18. If you're good at arguing about taxes, this is an opportunity. Because that's what's going to keep most people away. Which is what you want, because then you don't have to compete quite as heavily on just people throwing money around. $725. Taxes 2779. That study looks really reasonable, but with the current rent, that's not great. Taxes are pretty high, just not as high as that ridiculous amount we saw just a second ago. So we're at a negative 172 and 8%. Negative -1, 72, -8. Okay. Come on. The other thing I was thinking about just now is the fact that these Zillow rent rates are all over the place. When you're looking at averages, it doesn't make a whole lot of difference because you're trying to get ideas for a particular market. And I'm sure that their results of their statistics, I'm just going to call that 1,000 then, and that's not going to roll. Let's stick that in here. So their averages are going to feed into your averages and give you some kind of 228 and 7%, give you some kind of idea of what's going on. And then when you find stuff that you find interesting, that's when you dive in deeper and you get accurate numbers. Including more accurate insurance information and all the rest. You're probably -28, -2, -28. Okay, so look at this. It says great for first-time homeowners, blah, 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 or investment property, needs TLC, meaning it's run down. Motivated seller means that they're looking to get rid of the property quickly, which means you should definitely make a lowball offer and see where that gets you. 972, 975, and see where that gets you if you were interested in the property. 975. If you're not looking to stick a lot of money in rehabbing, shit, another one of these. Something's going on in that neighborhood, because look at that's just a ridiculous amount of tax. And that's going to absolutely kill it. Why would you buy a property with that kind of tax burden? -360, -19. -316, -19. Okay. Put that in there because it's kind of interesting. Those are the kind of questions. I mean, you go through 100, 200, 300 properties and you start seeing patterns. You start seeing duplexes in particular neighborhoods. Make a note of that. You know, another duplex. Dun, dun, dun. Okay. You see a bunch of duplexes, and that's sort of okay, although, again, just my guess, and I don't think it's particularly good. It's probably going to be a little higher than that. So what was I saying? So you see duplexes, or you see these crazy tax rates, 1736. 1736. Once you have enough, 68 and 3%. 68. And you're curious enough about a market to spend some time talking to an agent, make a note of these kind of things, right? Ask them, tell them that you've noticed these ridiculous tax rates. What's up with that? Ask them what duplexes go for in these particular, or rather ask them what the rent rates are for each side on a duplex in these kind of neighborhoods. And that should be interesting from two perspectives. One, you'll pick up information. Why is that? Okay. Okay. You'll pick up information. It'll also help you to weed out. It'll also help you to weed out agents that don't know what they're talking about. If they can't tell you what's up with tax rates or what the rent rates are like and all that kind of stuff, then they're not offering you any value. And worse, they probably don't know what they're talking about. So they're going to mislead you, even if it's not intentional. Where was it? One of this. So finding that out is a good thing, so you know to avoid them. Another duplex. See what they got to say. Ready for some updates. Ready for some updates is another way of saying TLC, is another way of saying rundown, deferred maintenance. You're going to have to pour some money in it. Okay, and and not only that, they're saying that both units are uninhabitable at the moment because the upper unit is close to move-in ready, with lower needing much more work, meaning you can't rent out either of these, which is interesting, which means that you have to offer them a lot less, and I'm still going to say 1,000. And let's see what that gets us. Taxes. 3231. 3231. $39, 3%. Here, that's another instant cash flow with little to no maintenance, or an updated single-family home with little to do. What they're saying is, because we've just cleaned this up, you can assume that you have no maintenance and no capital expenditure, which may be true, but that's a terrible way to analyze 975, an investment property. But let's have a look at what they're claiming, right? So they're saying, assume this. They all claim no, I'm sorry, that's, none of them will claim anything about vacancy, but we're going to leave that there. They're going to say no property management. So at the moment we're making $8, right? Hold on, let's get their tax history. 1682. 1682. Let's see what they're saying. 10%. So at the moment, with my conservative estimates, I'm saying you're going to make $137 a month. They're saying, all of them will say ignore vacancy, manage yourself, no repairs or capex because they just fix it up, and the place is making $500 a month, which it very well might do the first year or two. But what if you suddenly lose a tenant for 2 months? Let's call that 18%. You're down. You need to, you're moved further away, or you can't, for some other reason, you can't manage the property. All that goes away. Now this particular property looks pretty healthy, but I would never assume that that your expense ratio is below 50%. So here a little bit over, maybe you can shave out that 3%, and that would not represent any kind of risk. You're getting good results because the rent ratio is very high and the taxes are reasonable. 137 and 8%. But just because a place is another duplex, just because a place is in good shape now doesn't mean it's not going to, doesn't guarantee you the kind of tenants that won't cause you to need to spend a month turning the unit around, for instance. And it's run down because it needs TLC. 715, but we're calling that 1,000 because it's a duplex. I said 1,000 here. Let's see what the taxes are like. 22.57. $25, 1%. 25, 1. Okay, so another 20 properties. We've now looked at 100 properties in Milwaukee. I'll be back with a summary of our week at looking at Milwaukee properties. That's about it. My name is Spiero. You've been watching Buy and Hold Fundamentals. And again, if you are getting anything out of this, I'd really appreciate it if you would consider subscribing to my YouTube channel. That would mean a lot to me, and I'll be back soon with more.